Hi there, my name is Jamie, and welcome to September's video under the Quick Market Talk with Expert series. Today, we have renowned financial columnist, author, and inventor of the Guppy Multiple Moving Averages with us. Grab your cup of coffee and listen in as we ask Daryl to quickly explain what the Nikkei 225 index is all about and what are his long and short-term views on the index. Hi Daryl. Japan's Nikkei 225 is one of this year's top index performers, soaring to its highest level in 34 years. Could you explain to our viewers what the Nikkei 225 index is all about and why it is an important index to look at?
The Nikkei 225 is the primary index for tracking the performance of the Japanese market. It's the top 225 blue chip stocks. Now this is important. It's a price-weighted index, which means that the index is the average of the share prices of all of the companies listed on the Tokyo Stock Exchange. The TOPIX, or the Tokyo Price Index, is a capitalization-weighted index that includes all of the stocks on the Tokyo Stock Exchange. So although we might argue that the TOPIX is more representative of what happens in Japan, the Nikkei 225 gives us access to the top well-known major brand stocks. These are the drivers of the Japanese economy. And that's what's making the ability to trade the Nikkei 225 so interesting and exciting in the current environment. Because the Nikkei 225 is the best performing index in the world. And that's an opportunity that we don't want to miss. Of course, every index gives us an opportunity to trade the market as a whole. So what else makes the Nikkei 2225 so important? There are several important factors that not only reflects the business activity of the country. The Nikkei 225 has deep liquidity and low spreads. Now that's a trading advantage. It means that you can get in and out at the levels that you prefer. It means the difference between the bid and the ask, the spread, is very small. This makes for more effective trading. But there's one other important feature of the Nikkei 225, and that is that the Japanese yen and the Nikkei 225 index are highly correlated at around 70%. That means that when the currency appreciates in value, the Nikkei will take a hit. And of course the reverse. When the currency declines in value, the Nikkei will also react strongly with a high level of correlation. That means that you can watch one and trade the other. You look at the yen as a leading indicator as to how the Nikkei 225 may behave. And that gives us a different range of trading strategies. That's one of the things that makes the Nikkei 225 an important index on a global scale.
Thanks, Daryl, for explaining what the Nikkei 225 index is all about. Now, with the index retracing around 3% from its peak in July 2023, do you have a view on where the Nikkei index is headed from here?
On a weekly chart, it's clear that the Nikkei has traded in a long-term sideways trading band for much of 21 and 22. The breakout, when it developed recently, reached targets set by measuring the height of the trading band and projecting it upwards. Now the Nikkei exceeded those target levels. However, it has now pulled back in a bullish type flag formation. Now on a daily chart, this is considered to be a bullish signal as the market pauses and then moves further upwards. So looking at the Nikkei 225 at the moment, we can say that it had a bullish bias. And certainly the GMMA, the Guppy Multiple Moving Average relationships, support this analysis. So we can say that the secular trend, the long-term trend, is bullish. But is that reflected in the daily chart? there are several features of importance on the daily chart. The first is the double bottom that's occurred near 34,800. It's broken through its target level. We have strong resistance at 33,800. And then, if we continue to break above this trading band here, we have an upside target of around 38,900 in the longer term. So what we're looking for in the current environment is short-term rallies taking off from this support target level here. It has been tested. There was a slight failure here, but it rapidly recovered. So we're looking for this rally here to continue and move towards this previous resistance level. A break above this resistance level, based on the trading band calculations, gives us a longer term target around 38,900. That's a long-term target. It may take weeks or months to achieve. What's important is that this behavior continues to remain bullish. Traders will look for consolidation around this resistance level here and then for a breakout to develop.
Now, Daryl, allow me to introduce the usage of warrants to trade your short-term view on the Nikkei 225 index. To get started, you may wish to visit our warrants website, warrants.com.sg, where you could see the live index futures prices for a series of indices, including the Nikkei 225 index. Here, we're tracking the live futures over the December contract that is listed on the SGX. These prices are updated live. Now, in order to pick a warrant over the Nikkei 225 based on your target levels, you could use the warrant tool known as Warrant Selector. Use the Selector tool. You need only to select the underlying and whether you will bullish or bearish. If you're bullish, that is, thinking the market will go up, you will click on the call. If you're bearish, thinking the market will come off, you would be selecting the put instead. In this case, Daryl, you mentioned an upside target of first around 33,100 as the resistance level to look at. In that case, that is 2.5% higher from where current futures are. Increase the number of weeks on the selector, and you see that the warrants are generating geared returns. That is, returns that are higher than the underlying indices, 2.5% return. If you were to increase it by weeks, you will notice that the percentage gains on the warrants fall, and that is due to the effect of the time decay or the warrants holding cost. Now, in the case of this warrant, NIERW, by the fifth week, it is generating a return that is lower than the Nikkei's 2.5%, and therefore, if you were looking to hold this for around 4 to 5 weeks, you might wish to consider the other 5 warrants that are available over the Nikkei instead. By the 6th week, you notice that this first warrant here, NIERW, will be negative as a result of time decay. By the 7th week, there are 2 warrants now that are going to be negative, and therefore again, if you have a holding period longer than 7 weeks and more, you might wish to consider these 4 warrants instead. So in short, this selector tool helps you narrow down the number of warrants you could consider based on your target level as well as your holding period. Now, increase this by more and you find that there could be less warrants that you could consider. However, if the Nikkei futures were to break above this 33,100 and head to the next resistance level that was highlighted by you, Daryl, to 33,800, now that's 4.7% higher from here. In this case, you'll notice that by the 10th week, only 1 warrant will be clocking negative returns, but the 5 other warrants here will be clocking a return that is more than the 4.7% gain clocked by the Nikkei futures, and therefore suited for those who are keen to obtain a leveraged return based on their bullish view on the Nikkei 225. Now, one thing to note is that if the market were to fall 4.7% instead, against your view, Daryl, the warrants will be clocking a magnified loss. If you wish to know the approximate date you can hold on to the warrant until before it clocks a return that's less than the underlyings, you can use another warrant tool known as the warrant calculator. Now in this case, if we were to look at the warrant 9ERW and change the underlying bid price to the price target we were talking about, 33,800, you see that today, the warrant will make a return of 57% against underlying's 4.6% return. However, you need only to increase the date on the date slider, and you find that the warrant return will drop, as I mentioned, as a result of time decay, and move it until it generates a return that is below the underlying bid price. In this case, 2 months from now, on the 14th of November, it will be generating just 1.4%, less than the underlying price's gain of 4.6%. And therefore, the maximum date you might wish to hold onto your warrant for will probably be until only the 9th of November approximately. Now note that this date varies depending on the date you are using the calculator tool. So use it only when you're considering to enter the position via the warrant. Daryl, do you have any parting words for us?
These are difficult markets with high levels of volatility on a global basis. But when we look at the primary indexes that are trading, it's clear that the Nikkei 225, which has given a 26.6% trading return since the beginning of this year, that this is a market that is clearly outperforming other markets and which offers a range of trading opportunities which are difficult to ignore. As always, it's your choice as to which markets you decide to trade. But the Nikkei 2225 gives us a range of opportunities that are not found in more poorly performing markets.
Thanks, Daryl. Until next time. Thank you for watching our chat today, and do subscribe to our newsletter and follow us on Facebook and Telegram to be notified of our next video. You can find the links to the warrants in this video's description. Have a good day with the markets. Bye-bye.